Hi, hello my dear CA final students. So, hope my voice is audible to all of you. Yes. So, what is the agenda for today? Today we are going to discuss certain critical concepts, so which is necessary for the purpose of this September 25 exam, okay. And in this, the first aspect that I wanted to cover is the 14 marks question. So, this 14 marks question is actually a nightmare for many students. So, what you need to do is that you need to just follow this presentation format. So, this presentation format if you follow and accordingly if you are able to do the answer, that will be sufficient. So, what you need to do is that as soon as you start the question number 1, and my advice is that question number 1 you please put it at the end. So, what you need to do is that in that 3 hours, the first 30 minutes you need to focus on this MCQ part. So, you just keep a timer. First 30 minutes is for MCQ part. So, after that MCQ part, then the next 2 hours, okay, you give it for question number 2 to question number 6, any 4 questions you need to write, okay. So, in that, so you need to keep 2 hours wherein you should try to save the time. So, when you are trying to save the time and if you complete it in 1 hour 45 minutes, ensure that first 30 minutes is for MCQ and next 1 hour 45 minutes is for question number 2 to question number 6, any 4 questions. In that also I will tell you one simple trick. You go to question number 6. Question number 6 first. So, it is a theory question and you read the theory questions. So, you know that okay, what are all the theory questions which are asked, that you do in the first 15 minutes. So, in the theory question if you feel like okay, all the theory questions I know, in the process of solving the question number 2, 3, 4, 5 like that, so you feel like some questions really you are unable to tackle, then you take up the question number 6 theory question. But remember, for theory question you cannot expect full marks, so you will be getting lesser marks. If the paper is so difficult that you cannot attempt this question number 2 to question number 5, then only you need to touch upon question number 6. Otherwise you should never be touching upon question number 6. That is based on my observation, because lot of students are writing the answers but they are not getting the full marks with respect to theory questions. So that's the reason why please follow this, okay. And next, so last you will have 30 minutes minimum, but 45 minutes is what you need to have. So 30 minutes to 45 minutes you will be able to get. That's what, if you manage question number 2 to question number 6, so in that 4 questions in 1 hour 45 minutes, definitely you will have 45 minutes now that you are relaxed. And what is the advantage of writing question number 1 at the end? The advantage, first advantage is that your mental block is gone, so that you will be focusing only upon that question. And moreover, when you solve question number 2 to question number 6, so already some concepts will be revised. So because when you read the question, some concept will be hitting your mind, so therefore you will be getting accustomed to that, and therefore when you are writing the first question, definitely that will be helpful. Please follow this strategy, it will be working out for this exam, okay. And then already in the class also I told you a couple of times related to this is what you need to follow. And next thing, this question number 1 14 marks question, as soon as you take up this question, you need to prepare it in 4 steps, like total 4 statements should be there. The first statement that you need to focus upon is computation of gross GST payable on outward supplies. So total 4 statement headings I'll tell you, like page number 1, the page number 1 will be computation of gross GST payable on outward supply, page 1 and page 2. Page 1 and page 2 will be for statement number 1. In that you prepare a table also, particulars, value columns, CGST, SGST and IGST, and whatever explanations that you wanted to give, you give inside the table itself. Page number 1 and 2 easily it will take, because lot of outward supply transactions will be given. And then page number 3, in page number 3 you take statement number 2, computation of GST payable on inward supplies under RCM. Usually RCM inward supplies we will have only few transactions, so due to that reason you take only one page, that is sufficient. But here value is not required, just the particular CGST, SGST and IGST, like that you prepare. And then page number 4, page number 4 is computation of input tax credit availed and reversed. In that is a third statement, so you need to prepare particular CGST, SGST and IGST. So right now you create this 4 pages. Page number 1 and 2 is for statement number 1, page number 3 is for statement number 2, page number 4 is for statement number 3. Then after you do this, each and every transaction you read in the question, and you need to first identify whether it is a inward or outward transaction. If it is a outward transaction, definitely it should come in statement number 1. And for that, how to identify it is a outward transaction? Check whether it is services provided by, okay, services provided by, or they received this much amount from, like that. If at all they have given these words, which means it's an outward transaction. Okay, outward transaction, first you need to see, is that transaction supply or not a supply? If it is not a supply, then please write the note, because you will get the step marks for that. Okay, so for example, there is a transaction between distinct persons. Distinct persons within the state they will give. So within the state, when they are giving, it can be goods or it can be services. So only when they give within the state, they have obtained separate registration. You need to take separate registration. Otherwise it will be the, like not a transaction between distinct person, because within the state definitely they need to get separately registered. So what they will do, within the state, like that they will give, but they will not mention that they have obtained separate registration, which means it is first of all not a supply. You need to write a note. Suppose if they give another state, no need to mention that they have to separately get registered. In the another state, whether they are separately registered or not registered, but definitely it is a transaction between distinct person, even though without consideration constitutes supply. Okay, so therefore if it is not a supply, you write a note and don't take anything in the value column. And next you need to take second, suppose if it is a supply, it's a supply, it comes under 7 subsection 1, or it is not covered under 7 subsection 2, like that it will become supply, either A or B or C, like that. Then we need to check, is it covered under the exemption? For services, you know already what are the list of exemptions that we have with respect to notification 12 of 2017. Whenever you are giving a reference to exemption, you write section 11 read with notification 12 of 2017, the said activity is exempted. Okay, if it is services, because services related exemptions, you know. What if it is goods related exemption? So goods you don't know. So if the transaction is pertaining to goods, if it is given as taxable, if it is given as exempted, then only you take as exempted. If it is nothing given, if they have not given anything, then you need to treat it as taxable. Okay, so if nothing is given for goods, you need to treat it as taxable. If it is given as exempted, then only it will be exempted, otherwise it will be taxable. Okay, this is for goods. For services, you know what are the list of transactions which are covered under, like transactions which are exempted, you already know with respect to this. Then the next thing that you need to take is the supply which is taxable under RCM. For example, direct selling agent services provided to a bank or NBFC, like that they have given. Now in this case, it is a supply which is covered under RCM, but it is not having any implications for the liability. So that supplier liability, it will not come, because it will be taxable under RCM, correct? Because direct selling agent services provided to bank or NBFC is covered under RCM. But what if direct selling agent service is provided to financial institution? So we don't have such thing like that, because direct selling agent service cannot be provided to financial institution. It can be provided only to bank or NBFC. That too, if the supplier is body corporate or firm, it will be FCM. If the supplier is other than body corporate or firm, it will be RCM. So therefore, in my example, direct selling agent service to bank is covered under RCM. So it will not be covered under this particular liability. But you need to write a note. What is that? Supply taxable under RCM, and you need to take it into the value column. Why you need to take the value column? Because if it is exempted anyhow, you will consider it in the value column, because that will be useful for computation of exempted turnover while reversing the ITZ. Okay, even when my outward supply is covered under RCM, that is also to be counted as exempted turnover for the purpose of ITZ. So it should be treated as exempted for ITZ, so it should be taken into aggregate turnover. Then supply taxable under FCM if it is inter, that is if it is not exempted. If it is not exempted and not covered under RCM, then it will be FCM, and therefore it will be taxable. And if it is intra or inter, you need to check. So you need to know first it is deemed inter or not. If it is deemed inter, by default IGST column. If it is not deemed inter, so there are 10 transactions which are treated as deemed inter: import of goods, import of services, export of goods, export of services, and supplier in India, place of supply outside India, supply beyond territorial waters and up to 200 nautical miles. And if the place of supply is determined under section 13 and that particular place of supply is in India, then it is deemed inter. Then supply to SEZ and supply by SEZ. And next we have trading in PSLC, priority sector lending certificates, and next security lending scheme under SEBI, and supply of goods to a tourist. These are all deemed inter, and apart from that you have received some advances and you don't know whether it is intrastate or interstate, then also it will be deemed interstate. These 10 transactions deemed interstate means it will be coming under IGST column. Otherwise we need to treat it as intrastate or interstate based on place of supply. So the place of supply provisions needs to be tested, and when you are writing the explanation, don't write too much detail, just in a crisp format you write, because the time also we need to save. So because in this writing notes sometimes lot of time you will be spending, so don't do that mistake. So just the crisp information you write, that will be sufficient. Okay. Then, so if it is inter, then put it in the IGST column. If it is intra, so put it in CGST and SGST column, and you need to take it into the computation. So everything, so taxable also you need to take, exempted also you need to take. Now what is the advantage of exempted turnover? This exempted turnover is useful for the purpose of ITC reversal, whereas what is the purpose of taxable turnover? This taxable turnover, but don't take zero rated. Okay, so zero rated don't take for 86B computation. So we need to apply 86B. What is 86B? So whenever the taxable turnover in a particular month exceeds 50 lakhs, we need to pay 1% of our liability through electronic cash ledger. So due to that reason, so the taxable turnover is useful for checking the applicability of rule 86B. But remember, while taking the taxable turnover, don't consider these zero rated. But zero rated will be taken into the statement number 1. But where we need to consider? So zero rated depends. So whether it is with payment of IGST or without payment of IGST option. If it is given in the question as under bond or LUT, like that, if it is given, definitely it is without payment of IGST option. So as it is without payment of IGST option, you just write the explanation and don't count that for the purpose of rule 86B taxable turnover, but that will be counted for the purpose of aggregate turnover. While determining aggregate turnover, it will be taken which one outward, like zero rated supplies, but don't count it for rule 86B. Got it? Keep that in mind. And next thing, suppose if it is zero rated supplies, if not given as bond or LUT, and this, which means you need to take the assumption that it is upon payment of IGST. Only when it is given as bond or LUT, you take that without payment of IGST. Otherwise, you take it as with payment of IGST option, and you need to compute the IGST liabilities regularly, like how you prepare a normal taxable turnover. Like that, you need to take that and liability. But again, remember, don't count whether it is with payment of IGST or without payment of IGST. Don't count it for the purpose of your turnover, taxable turnover, for checking rule 86B. Keep that in mind. Okay. So these are the nuances. And one more point also they will be giving related to merchant export. When they are giving merchant export, that is sale to a merchant exporter, like that they will give. Remember, whenever we are making sale to a merchant exporter, we should not take the regular rate of GST that is applicable. We need to consider 0.1%, 0.1% of the turnover as the GST liability. Okay, but whether it is interstate or intrastate, that depends upon place of supply. Suppose if the merchant exporter is within the state, it is intrastate, so CGST is GST. If the merchant, then you need to take, so 0.1% divided by 2, 0.05 and 0.5, like that. Okay, suppose if it is interstate, then you need to take 0.1%, but this alone you keep in mind. When they specifically give merchant exporter, you need to take 0.1% as the rate. Otherwise, you need to go by the rates which is given in the question only. You don't follow any other rates. Okay, rates will be given. So this is about statement number 1, and you need to write the notes each and every point. Then suppose if it is inward supply, so outward supply will be appearing only in statement number 1, whereas we have some inward supplies. These inward supplies, so we need to analyze it may be coming under 2 statements. If it is inward supply covered under RCM, so first you need to keep it under statement number 2. Also we need to check whether ITC is available or not. If ITC available, you need to enter it in statement number 3 also. So when inward supply, when you analyze parallelly both. That is it FCM or RCM? If it is RCM, inward supply under RCM, it should fall in statement number 2 and statement number 3. In statement number 2, you need to consider it as RCM liability, and then along with that, immediately you analyze whether ITC is available or not. If it is available or not, you enter in statement number 3. So that you don't have to again take a separate effort in analyzing what are the ITC availability. Then suppose if the inward supplies are not at all a supply, so write the fact that it is not at all a supply. So in the second statement, if you see computation of GST payable on inward supply under RCM, suppose if the inward supply is not at all a supply, so then don't take it, but you need to write a note that the said activity is not a supply like that. Suppose if the inward supply is exempted, so that also you need to write, because what we do is that inward supply by default we will take taxable FCM, RCM like that we will analyze, but there also sometimes they will give some hidden information that it may be exempted or it may be not a supply. Example I will give you. There is one latest CBIC circular related to penal charges which are paid to the banks or financial institutions. So whenever we take a loan and that EMI got defaulted, so the bank will be levying penal charges. Previously it was penal interest, and in the name of penal interest now they will be collecting penal charges. Whether these penal charges are treated as consideration and chargeable to GST? No, it's an inward transaction. We pay the penal charges, but it will not be treated as consideration, consequently it will not be taxable. So we don't have to take it into the liability at all. So that's what we need to write here if it is not a supply. Suppose if it is exempted transaction, example, we are receiving services from government. So when government, for example, safety certificate charges paid to government like that they have given, that's an exempted transaction even though we are paying it to government. And don't apply RCM, because first analyze whether it is exempted or not. So it is exempted, write a note. And suppose if it is taxable under FCM, so it will not be appearing in RCM liability, correct? So it will be going into ITC only. So whatever GST that you pay on inward supply under FCM will travel only to statement number 3. So if ITC available, you write the ITC available. If ITC not available also, you write that ITC not available like that. Okay. Every point given in the 14 marks question should come into the answer sheet, should be entered into the answer sheet in one place. Okay. So that is with respect to this inward supply taxable under RCM. So that definitely you need to bring it here. If it is intrastate, CGST, SGST, if it is interstate, IGST column. That's with respect to this. And now there is a question here, IGST on import of goods. So whenever we are importing services, no doubt it's an inward supply under RCM, we will enter it here. What about import of goods? There are two different treatments which are being followed by ICAI. On import of goods, in some computations they have considered it under RCM liability. On import of goods, IGST paid is not at all considered in RCM liability. What should we do? So if you observe the recent answers, what ICAI has given is that, so IGST on import of goods they have considered as part of RCM liability. So please consider IGST paid on import of goods as part of RCM liability, and accordingly you put it here under IGST liability under RCM. Okay. Moreover, you can take it as ITC as well. See, whatever we are keeping in statement number 2 will also be coming in statement number 3 if ITC is available. So inward supply, whether it is taxable under FCM or RCM, you will be first considering that whatever GST paid under FCM or RCM, so you will be entering here. And suppose if ITC is not available, why ITC not available? 3 reasons ITC not available. Maybe it is a blocked credit, or maybe it is used for non-business purpose, or maybe it is used for exempted outward supply, or maybe the conditions for availment of ITC is not fulfilled. So some of those points I'll tell. Blocked credits you will know, 17 subsection 5, what are the blocked credits, etc. and all that. Okay. And inward supply used for non-business purpose will be given in the question itself. Inward supply used for exempted outward supply. So in outward supplies you need to analyze, is there any exempted transaction, and whether this inward supply is used for that exempted outward supply or not, you need to check. If that be the case, then ITC not available. But based on conditions they will be giving certain cases. For example, they will tell some asset has been purchased and the full invoice value along with the depreciation has been capitalized, along with GST has been capitalized for computing depreciation, means ITC not available. They will tell invoice missing, ITC not available, or they have not received the goods in this month but invoice is there like that, they will tell ITC not available. Or if they have received the goods as well as invoice, but the goods are received in lots, only the first installment is received now and the subsequent installment is received at a later point of time like that, they will give, which means we cannot take ITC for this month. And also sometimes what will happen, they will tell the supplier is required to give e-invoice but instead give a normal invoice like that, they will tell. So when supplier is required to give e-invoice but gave a normal invoice, it is not a valid invoice, so we cannot avail the ITC with respect to that. All those things also you need to keep in mind. And sometimes the 180 days condition they will be bringing in. So see, first 180 days condition we don't have to check now. So even if we have not made payment to supplier, we can definitely take the ITC. But if the payment is not made within 180 days, we need to reverse the ITC. So many students, what they will think, okay, ITC not available, like that they'll write. Don't do that. We can take ITC. Even one more point also they can check, that supplier has not filed 3B yet, like that they will give. It's okay, we can take ITC. If the supplier not filed 3B by September 30th of the succeeding financial year, then only we need to reverse the ITC. So therefore right now we can take the ITC. That is about this ITC availability. The ITC available in 3B. So T1, T2, T3 you should not take. Already you know what is T1, T2, T3. T1 is blocked, like inward supply used for non-business purpose. T2 inward supply used for exempted outward supply. T3 is blocked credit. You need to take out. So ITC availed in GSTR 3B. Now here comes the very important aspect, rule 42 and rule 43. Whether that question has rule 42 or 43, you need to check. When there will be rule 42 and 43, first rule 42 we will take. Rule 42 is applicable if the inputs and input service is used for both taxable and exempted outward supplies. So you need to analyze the outward supplies. Do we have exempted outward supplies? Yes. Checklist number 1. Yes. Done. So now you analyze the inward supplies. Whether these inward supplies are common for both taxable and exempted, that you need to check. Only then you apply rule 42. Otherwise blindly don't apply rule 42. So in the outward supply there should be exempted outward supplies, and in the inward supply there should be some common inward supplies. So then definitely we need to apply rule 42. What you need to do is that as per rule 42, you take that common inward supplies. Again I am repeating, common. Common means whichever is not specific is common. So that common inward supplies, whatever GST paid into exempted turnover divided by taxable total turnover. That already you know what are exempted turnover and total turnover. So based on that you need to reverse the ITC. Rule 43, capital goods. Only capital goods. Capital goods, if it is purchased and used partly for taxable, partly for exempted, like that, is it there or not, you check. If it is there, then you do that computation. Again same, total ITC divided by 60. Whether we need to take 60 or 48 months or 36 months, how we need to know? In the question you check what is the life of the capital goods. If they have given the life of the capital goods, you take the life of the capital goods. If the question is silent, you take 60 months, because up to 60 months, don't take always 60 months. Suppose if the question says the life of the capital goods is considered as 48 months, means you take 48 months only. So total ITC divided by 48 months into exempted turnover divided by total turnover you need to take. Okay. That is about rule 43 or any other reversal, whatever reversal is there. Suppose if they say like some time back they have got the inward supply for which payment is not made within 180 days. So that within 180 days falls in this month. So we need to reverse. Or so last year, so ITC has been availed, but supplier not filed GSTR 3B up to September, and we are right now in October, November month. Then we need to reverse the ITC. That is other reversals. Okay. And when we deduct it, then add the opening balance of ITC. Remember, while applying rule 42 and 43, you should never take the opening balance and apply rule 42, 43, because opening balance will always be fully eligible. On that, don't do the reversal. So you do the reversal only on the ITC availed in 3B. Don't do on the opening balance. So therefore they will give this twist also. Opening balance they will give. What we will do? Opening balance plus current month whatever is purchased, everything we will take for reversal. Don't do that. Okay. Only whatever is inward supplies during the month, that only you need to do the reversal. After doing the reversal, you will get net eligible ITC na. So to that you need to add opening balance. So like you will get net eligible ITC for utilization. So these are the key points that you need to keep in mind for statement number 3. Now you have got GST payable under FCM, then inward supplies under RCM, then ITC availed, reversed and net eligible ITC, and finally computation of net GST payable. When you do computation of net GST payable, first you take the FCM liability. From where we will get the FCM liability? From this place itself. Computation of gross GST payable on outward supply. From here itself you got the FCM liability. You take that FCM liability and you need to keep it here. And then ITC, that is already there in statement number 3. You know how much is the ITC. Here that manner of utilization of ITC you need to check. What is that? IGST credit first you need to exhaust. It should be utilized for payment of IGST liability, and the balance can be utilized between CGST, SGST in any manner, any proportion. So in what manner, what proportion? Just analyze the liability and ITC of CGST, SGST. In that ratio you divide. You see the liability of CGST, SGST, and for example if it is in 70-30 ratio you divide it, otherwise equal ratio you divide. So anyway you can follow, but depending upon the question you need to do that. That is the excess balance of IGST. Then CGST, SGST balance we use for CGST, SGST. If there is any excess balance of credit of CGST, SGST, that we will use for IGST. But when we do this, you need to check for rule 86B. And when rule 86B is applicable, first point, so that person's taxable turnover in a month excluding zero rated supplies, even if zero rated supplies upon payment of IGST, don't take that. So excluding that, okay, if that is more than 50 lakhs, then they need to pay 1% of their gross liability. Which gross liability? Again, gross liability excluding IGST paid on zero rated supplies. Zero rated supplies don't count at all, okay. So gross liability excluding IGST paid on zero rated supplies, 1% we need to pay through cash ledger if the taxable turnover exceeds 50 lakhs. But for that, we should have sufficient balance in the ITC. If the ITC balance itself is less than the liability, don't apply rule 86B. If the ITC balance is close to like gross liability, then definitely there is a chance that whatever liability in cash that you pay may be less than 1%. So you need to apply 1% of your liability through cash ledger. Keep that in mind, okay. And there might be some relaxations for payment of 1% through cash ledger. That relaxations also you need to check. What is that? If they are government department or local authority or a PSU or suppose statutory body, then rule 86B is not applicable. Suppose in somewhere in the question they give that they have paid income tax more than 1 lakh in the last 2 years, or they already got more than 1 lakh as refund of unutilized ITC in the last year, or cumulatively already they paid 1% of liability, so up to the current month, like that somewhere some data is given, then 86B is not applicable. All these are traps which they will be laying down so that you will be committing these mistakes, okay. So that you need to check. Suppose if rule 86B is applicable, what you should do, out of this gross liability, 99% only we can pay using ITC. So 99% of liability alone we will pay using ITC. Suppose if rule 86B is not applicable, full amount we will pay using the input tax credit, entire liability, and therefore we will get the net GST payable. For that we need to add GST payable under RCM. While computing 1% limit, don't take RCM liability, because RCM liability anyhow you have to pay through cash ledger. So therefore you need to consider only FCM liability. That FCM liability we need to pay 1% of the FCM liability. That to which FCM liability? Other than zero rated supplies, okay. So RCM liability you need to add. Then you will get net GST payable using electronic cash ledger. So this is how you need to follow in the question, so that you will be able to do the 14 marks question, okay. So just stick on to the template and you analyze like this and you parallelly put into the respective tables, okay. Now, so apart from this, what are the crucial aspects that can be tested? I am just giving you an overview. What are the various aspects that is possible? You can see here, I am just giving you a list of few critical areas which are possible, and don't worry, I will just share it in the Telegram group. Once whatever I am writing, I will share it in the Telegram group once the concept is over. And the first aspect that might be tested, see, these are all the important probable areas for September 25 IDT, okay. So therefore there are certain areas which I prefer, like I analyze based on my research. So these are all the probable areas which could be tested in exam. So you need to definitely focus upon these areas. So that's the reason why I'm just taking it here. So based on my analysis of the previous exam question papers, and it may happen or it may not happen, really I don't know, but this is just the important area. Suppose from this itself if you are getting good questions etc and all, I will be great, happy etc and all, but nothing like this is based on past exam questions which ICI usually analyzes. That's what I am discussing now. The first aspect is with respect to merchant export. So what are the aspects that you need to know about merchant export? So merchant export scheme, if you see, okay, so we need to remember the rate as 0.1%. So sale to merchant exporter, like that it is given, the rate will be 0.1%. And what that merchant exporter can do, that merchant exporter can avail this 0.1% as ITC, okay. Merchant exporter can avail 0.1% as ITC, okay. And what merchant exporter will do? He will be getting refund and he need to make 0 rated without payment of IGST always. So definitely he will be making 0 rated without payment of IGST, without payment of IGST. So therefore what they will do, they will give this said person is in merchant export like that, they will give merchant exporter, he is under he is a merchant exporter like that they will give. Now in this 14 marks question, if they give that he is a merchant exporter, he is a merchant exporter and making some export, they will not give LUT or bond. Please don't bring the assumption there that they are going to pay IGST, because merchant exporter can never pay IGST and export it. So he will always be exporting under bond or LUT, that will not be given. So it's a trap that they will give. So they will tell said person is a merchant exporter making exports like that they will give, but they will not mention bond or LUT. By default they have to export it under bond or LUT only. So don't take with payment of IGST as the assumption there, okay. So that's why I am writing it here. So 0 rated without payment of IGST always, always, and they will be getting refund. So refund and ITC, refund of ITC. So how refund of ITC, under which model they will be getting refund of ITC? Under inverted tax structure, under inverted tax structure they will be getting the refund, okay. So this is with respect to merchant export. These are the points that you need to keep in mind, okay. So rate will be 0.1%, they can merchant export, that is for the supplier. This rate 0.1% is for the supplier, and the merchant exporter can avail 0.1% as ITC. They have to make 0 rated without payment of IGST, refund of ITC under inverted tax structure. Then next, second aspect is about the margin scheme. Margin scheme. So margin scheme versus notification number 8 of 2018. Notification number 8 of 2018. What is it? So margin scheme is when applicable, suppose if there is a sale of used goods, okay, purchase and sale of used goods, purchase and sale of used goods, purchase and sale of used goods, then there will be margin scheme. But when notification 8 2018 is applicable, purchase of new goods and sale of, and that too what, new goods, new vehicles, new motor vehicle, only for motor vehicle. Here it is for all goods, whereas here it is only for motor vehicle. Purchase of new motor vehicle and sale after use, sale after use. And in both the cases, what are the differences you need to know? Here they are buying also used goods, selling also used goods. Here they are buying new motor vehicle, and notification 8 2018 is only for motor vehicle, and they are selling it after use. What will be considered as the value here? The value will be sale price minus purchase price. Sale price minus purchase price will be considered. But what will be considered as the value in this place? The value in this place will be sale price minus WDV, that is depreciable value, WDV. So this is what we need to, and remaining points and all are common. What are the common points in both the cases? In both the cases, okay. So what are the common points in both the cases? In both the cases, what are the common points? If value is negative, if value is negative, then ignore, then next one, ITC not availed, ITC not availed on purchase, ITC not availed on purchase. So these are the aspects that you need to keep in mind, okay. ITC not availed on purchase. So these are all the common points, okay. Next, so the third aspect, keep in mind, please, notification 8 2018, they are buying a new motor vehicle and selling it after use. So this you need to check, this you need to check, okay, and only then you will be able to understand, like the application, margin scheme versus this. Then the third area is with respect to change in rate of tax, change in rate of tax. So already we know change in rate of tax, what should be taken. So first you need to see what is considered as the date of payment. The date of payment will be, so if the payment is credited within 4 working days from the change in rate, the date of payment will be date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is not credited within 4 working days from the change in rate, then in that case the date of credit in the bank account will be taken as the date of payment. That is clear. And suppose if this supply is before change in rate, that is the provision of service or supply before change in rate, we need to take whichever is earlier. If the supply is after change in rate, then we need to take if both invoice and payment before change in rate, whichever is earlier, if one before one after, whichever is later. So that change in rate of tax you know. So to whom it is applicable? So applicability if you see, it is applicable to a person under composition scheme for goods. If you take goods, for all services it will be applicable, no doubt. For all services, let it be FCM or RCM, this will be applicable. Applicability is for everyone, all. And goods RCM also it will be applicable. For goods under RCM also it will be applicable. But for goods under FCM, only to 2 people it is applicable. Who are those 2 people? Specified actionable claims, HC block. Okay. So for a person who is making supply of specified actionable claims, HC block, that is horse racing, casinos, betting, lottery, online money, gaming and gambling, and then composition scheme. Okay. So that is with respect to this. And the one example you gave in Rocket Revision where the car dealer capitalized GST and who sold it later, would is margin scheme or notification 8/2018? Definitely it is notification 8/2018. So because when he capitalized it and he sold it after, so notification 8/2018 will be applicable, it is not the margin scheme. So because margin scheme is rule 32 sub rule 5, okay. So therefore buying and selling of second hand goods, but that case it will be margin scheme only. Next, this is about this. So to whom change in rate is applicable? For all service FCM or RCM, goods RCM, goods FCM, HC block, that is specified actionable claims and composition scheme. Then number 4, that is corporate guarantee. Corporate guarantee, already you know corporate guarantee. So corporate guarantee to related persons, and that will be covered under rule 28 sub rule 2. Okay, corporate guarantee to related persons, that will be rule 28 sub rule 2. What should be taken as the value? The value will be 1% of, guarantee per annum, 1% of guarantee per annum, or actual consideration, whichever is higher. Okay, suppose if they give corporate guarantee to a related person outside India, then what we will do? Suppose if they give corporate guarantee to a related person, outside India, then what will happen? If it is corporate guarantee to a related person outside India, so definitely in this case, so rule 86 like this, rule 28 is not applicable, 28(2) is not applicable. Apply rule 28 sub rule 1, that is open market value or like kind and quality or cost plus 10%, okay. So or residual value, rule 31. So that is what you need to apply, okay. Open market value, like kind and quality, cost plus 10%, rule 31, that should be taken. So don't apply rule 28 sub rule 2. So corporate guarantee to related person where the recipient in India, only rule 28 sub rule 2 will be applicable. So recipient in India. Whereas if the corporate guarantee is to a related person outside India, you need to apply rule 28 sub rule 1. Don't forget about this. Then next one, number 5. So that is with respect to one case law, customs case law, that is Hanil Era Enterprises, Hanil Era Textiles case. So what is this Hanil Era Textiles case? So there is one EOU, that EOU has imported diesel generator sets and furnace oil, and what they did, there is a exemption notification which says that any import of diesel generator sets and furnace oil for generation of electricity and that electricity should be used in export of finished goods, then in that case on import of diesel generator set and furnace oil, no need to pay customs duty, like that we have an exemption. So what they did, so they sold the surplus power, they generated the power and the surplus power generated is sold to DTA, okay. Sold surplus power generated by EOU to DTA, and because of which whether the exemption notification need to be denied, no, because nowhere in the exemption notification it is given that exclusively they should be using it only for export of finished goods, as they have not given any condition, restrictive condition in the notification, exemption notification, we cannot keep that, okay. Sold surplus power generated by EOU to DTA, so can avail exemption on import of diesel generator sets and furnace oil, okay. This is that case. So customs case law, this case somehow I feel like this can be tested for 4 marks. And next one, that is 6, power not to recover GST, power not to recover GST as a past general practice, that is given in section 11A. Somehow I feel this question might be tested as a theory question. So what is it you need to write? You need to write, as per section 11A, government is empowered on the recommendations of the GST Council to not levy GST on a particular transaction or to short levy GST on a particular transaction on which there is no levy of GST or short levy of GST in the past, and as a past general practice the government can reduce the rate of GST or can give the exemption notification, okay. So that is what you need to write, that is power not to recover GST as a past general practice. This somewhere like a theory question or somewhere it can be tested. And next one, number 7, section 74A. This section 74A, definitely it will be tested in this exam. Trust me, because this is that much important that it will be tested. So I am just showing you this in this that's it book itself. So quick recap we will do with respect to 74A. So when 74A will be applicable? 74A will be applicable whenever there is, you know, like non-payment of GST, short payment of GST, wrong availment of ITC and wrong utilization of ITC or erroneous refund. Suppose if you don't have this, you take a screenshot of it. So demand and recovery section 74A, there is non-payment of GST, short payment of GST, wrong availment of ITC, wrong utilization of ITC or erroneous refund. It may be any reason. It may be on account of fraud, willful misstatement, suppression of facts to evade GST, or it is other cases. Now the same section will be applicable, that is 74A will be applicable. What will be the penalty in this case? In this case the penalty will be 100% of tax or ITC or refund, not in or 10,000, whichever is higher, that point is not there. Whereas here it is 10,000 rupees or 10% of tax or ITC or refund, whichever is higher. And what are the places where we need to check CGST, SGST separately? There are total 3 places we need to check CGST, SGST separately. So first one is penalty. All penalty sections you need to check CGST, SGST separately, and next you need to see pre-deposit. And then you need to take late fee. In these 3 places, penalty, pre-deposit and late fee, these places you need to do separate computation for CGST. If the question is about CGST, just to do CGST. If the question is about penalty, late fee or pre-deposit like that, then you need to do, then also you do as per CGST and multiply by 2. So because you need to do the computation as per CGST, if the question is related to IGST, or if the question did not specify under CGST Act like that, then you do it as per CGST, multiply by 2, okay. So this is the penalty, 10,000 or 10% of tax or ITC or refund, whichever is higher. This is other than fraud. If it is fraud, penalty will be 100% of tax or ITC or refund. And here we have certain discount. What is that? If it is fraud case, if you pay tax and interest before show cause notice, then you need to pay just 15% of the penalty. If you pay after show cause notice within 60 days, not 30 days, within 60 days, then 25% of the penalty you need to pay. If you pay within 60 days from the date of the order, then 50% of the penalty you need to pay, and beyond 50 days from order adjudication order date, if you pay, then you need to pay the normal penalty. Whereas in case of other than fraud, if you pay before notice, there is no penalty. If you pay after notice within 60 days, then it will be also no penalty, otherwise you need to pay the normal penalty. And in both the cases, benefit of reduced penalty is not applicable. That this benefit of reduced penalty not applicable if the self-assessed tax is not paid within 30 days from the due date. That point is there even for 74A. What is self-assessed tax? Self-assessed tax means that tax which is reported in GSTR 1 but not paid through GSTR 3B is known as self-assessed tax. And next you can see what is the procedure for section 74A. So this 74A is applicable for financial year 25-26 onwards, okay, because up to financial year 24-25 onwards, financial year 24-25 onwards, this will be applicable. So if the question is pertaining to financial year 24-25 onwards, you need to apply 74A. If the question is pertaining to before that financial year, before financial year 24-25, if the transaction non-payment short payment happened, then you need to apply 73-74. So here what is the procedure for 74A? For the financial year 25-26, you need to see non-payment of GST, short payment, wrong availment, wrong utilization, first 4 cases. Then you need to take the due date of GSTR 9, that is due date of annual return. From the due date of annual return, within 42 months a show cause notice needs to be issued, and thereafter after this show cause notice within 12 months, or it can be extended for a further time of 6 months. So this is the revised time limit. So first show cause notice time limit is 42 months, that is 3.5 years, and thereafter the time limit is 1 year, but it can be extended for a further period of 6 months. They can pass a demand order. Whereas in case of erroneous refund, so within 42 months from the date of erroneous refund, they can give a show cause notice, and thereafter within 12 months plus 6 months they can pass a demand order. This is about 74A that you need to keep in mind. So please clarify export of goods upon payment of customs duty. That anyhow I am going to discuss this point. So this is about 74A. And the next aspect is number 8. That is Priya Blue Industries case. So Priya Blue Industries case, Priya Blue Industries case. So this is in customs. So what you need to remember in this case is that, so refund is not an alternative to appeal. Refund is not an alternative. Refund is not an alternative to appeals. What does it mean? It means that generally like what happened, they have paid the excess tax, but this excess tax they have paid in pursuance of an order. So they have paid some duty under protest in excess, and they have to go for appeal, but the time limit for going for appeal is over. So due to that reason they have made a refund application, but refund application to the same authority is not valid. So whenever the adjudicating authority or the customs authority has passed an order for payment of customs duty, if we have any dispute with respect to payment of customs duty, we should have gone for appeal, but you cannot make a refund application stating that there is some excess payment of tax. That is not the correct mechanism. That is about this. Then next, number 9, monetary limits for compounding of offence. Monetary limits for compounding of offence. Compounding of offence. So there is a possibility of asking a question on this, so that I am just showing you here compounding of offences. So in this compounding of offences, the monetary limits you need to remember. So I am just giving a quick recap. Compounding of offences is given under section 138. So what is the meaning of compounding? Granting immunity from prosecution. Prosecution means what? Imprisonment upon payment of compounding fee by the offending person is known as compounding. Okay, basically there will be immunity from prosecution. What is a compounding fee? Suppose if the question did not specify what is the offence, specific offence, then the compounding fee will be 25% to 100%. If the question, because in MCQ you will get confused. In the question, if they have specifically mentioned what is the offence, then accordingly we need to take the specific compounding fee. If they have not mentioned the offence, then we need to take the general compounding fee. What is the general compounding fee? So minimum 25% to 100% of the tax involved. And So in addition to this compounding fee, such person should pay the tax, interest and applicable penalty, and the first time compounding is not possible in some cases. What is that? Invoice without supply, and suppose if the imprisonment order is already passed, and restriction on subsequent compounding, all offences subsequent compounding is not possible. And special points, compounding is possible if the prosecution is not initiated or the prosecution is ongoing, but if the prosecution order is passed, then compounding is not possible. After initiation of prosecution, that is they started the prosecution, means imprisonment proceedings they started, even then we can pay the compounding fee and the proceedings will be dropped, will be abated, so the officer will withdraw the case. So what is the steps involved? So first we need to make an application along with the, like for compounding, along with payment of tax, interest and penalty due, and a commissioner will call for the records and examine from the concerned officer, and the compounding order will be passed within 90 days from the date of application, and after the compounding order within 30 days we need to pay the compounding fee. And what is the specific compounding fee? If it is offences under section 132, what is that offences? Suppose if it is books of accounts default or dealing in goods liable for confiscation, it will be flat 25%. Whereas if it is other offences, what are the other offences? Invoice default, that is supply without invoice. So invoice without supply not possible, so supply without invoice, or ITC default, or erroneous refund, or collected amount as tax not paid within 3 months. In that case, so if the amount is more than 5 crores, then it is 50% to 75%. If the amount exceeds 2 crores but does not exceed 5 crores, then 40 to 60% will be the compounding fee. This is the specific compounding fee that should be taken. Then this point also keep in mind. Suppose if they did books of accounts default also and collected amount as tax not paid within 3 months, then which should be taken? The highest should be taken. That is, this only should be taken. This 25% don't take, don't divide it there. So they did books of accounts default also and they did collected amount as tax not paid within 3 months, then in that case don't take for books of accounts default 25%, and for collected amount as tax not paid within 3 months, that different 40 to 60 or 50 to 75, don't take that. You take highest one, that is this 40 to 60 or 50 to 75 only should be taken. So that is about this monetary limits for compounding that you need to check. Next one, so 10, pre-deposit limit plus monetary limit for department appeal. So this also somehow there is a high chance that it can be tested. So what is that? Because it is the amendment. What is that you need to remember when it comes to monetary limit for appeals? The monetary limit for appeals is what? So like department appeals, that point can be tested. So you can see here, so if department is going for appeal, the monetary limits for GST 80 is 20 lakhs. More than 20 lakhs only department can go for appeal. High court will be more than 1 crore, Supreme Court will be more than 2 crores. While computing this limit, we need to check for the tax. Suppose if tax plus interest plus penalty, everything is in dispute, so you need to check only the tax. If the tax amount is, that is total of tax amount, is more than 20 lakhs, 1 crore or 2 crore, then they can go for appeal. And suppose if it is only interest or only penalty or only late fee, then you need to check that amount only. And if it is refund also, you need to check only the refund. And this monetary limit, so is not a precedent. Suppose if the department did not go for appeal because of the monetary limit issue, does not mean that they have accepted this. So in another proceeding, definitely they can go for appeal. And suppose if it is a composite order, multiple orders together they are going for appeal, then in that case we need to see the sum of all the amounts in the composite order. But this monetary limit is not applicable if the act ultraviolates the constitution, or if the dispute is related to act ultraviolates the constitution, or the rules ultraviolates the act, or the notification or order ultraviolates the rules, or because of the strictures or adverse comments against the department, or certain specific cases, that is valuation. Remember, valuation, classification, refunds, place of supply, or any other issue which is having recurring implication. So this is one area. And another one is the pre-deposit. What is the pre-deposit limit? The pre-deposit limit, first appeal will be 10% of disputed tax subject to maximum 20 crores. So previously it was 10% subject to maximum 25 crores like that. Now it is 20 crores, and this 20 crores is under CGST. This is CGST. Then it comes to IGST, it will become 40 crores. Okay, and 100% of the admitted due, only 10% of the disputed tax. But remember, if it is penalty under 129, only penalty under 129, the pre-deposit will be 25% of penalty. Whereas in case of So appeal to GST-80, appeal to GST-80, that is second appeal. So then also now it is same, 10% of the disputed tax subject to maximum 20 crores. So first appeal or second appeal, there is no difference. And whether we need to pay both the places, yes, we need to pay both the places. So first appeal, whatever is the disputed tax into 10%. So second appeal also, whatever is the disputed tax into 10% that we need to pay. And that pre-deposit 2 times we need to pay, and that we will be getting as a refund, and the refund interest will be 9% per annum. And there is a minimum fee, so appeal fee is there. So what is the appeal fee? Minimum appeal fee will be 5,000 rupees, and then 1,000 rupees for every 1 lakh or part thereof, subject to maximum 25,000. For example, if the dispute is 4,20,000, so 5,000. If the dispute is 3 lakhs, then also 5,000. If the dispute is 2 lakhs, then also 5,000. Suppose if it crosses more than 5 lakhs, then in that case, suppose 8 lakhs. 8 lakhs means 1,000 per lakh, so 8,000. Suppose if it is 36 lakhs, then maximum will be 25,000. So that will be taken as the appeal fee. So with respect to this 10th point that you need to keep in mind. Next one, 11. So remission of duty, remission of duty. So this is also one area, this can be tested. So when remission of duty will be applicable? So remission of duty will be applicable whenever the imported goods, are destroyed. Okay, so whenever the imported goods are destroyed. So one second, exemptions with respect to customs. Yes, exemptions, you can see remission of duty. Remission of duty will be applicable in a scenario where imported goods, okay, are destroyed or abandoned. Remission of duty will be applicable. So what is the process? First you need to pay the duty and prove to the officer that the goods are destroyed, and then we will get the refund. Okay, and in this case, whether for warehoused goods, whether remission of duty is applicable? Yes, even for warehoused goods also remission of duty will be applicable. So this remission of duty concept can be tested in exam. So that's what I have given there. And next one, next area, 12, import of goods at concessional rate of duty rules. Import of goods at concessional rate of duty. So in this we have certain amendments, so that can be tested. So what is that limits? Okay, so where they need to focus upon, you can see here the limits is 1 year plus 3 months. Previously unutilized goods, any imported goods which are imported under this particular import of goods at concessional rate of duty rules, so needs to be unutilized goods needs to be exported or needs to be sold in India along with payment of customs duty with interest within 6 months. Okay, but now they have changed the time limit to 1 year, and it can be extended for a further period of 3 months. So any imported goods under these rules, import of goods at without payment of duty or at concessional rate under these rules, unutilized goods within 1 year plus it can be extended for a further period of 3 months. It should be either exported back. So export without payment of customs duty, but remember you can do export only if the value of the goods, unutilized goods or defective goods, is more than the value at the time of import. There should not be any negative value addition. Value of such goods should be greater than or equals to value at the said goods at the time of import, or they can sell it in India along with payment of applicable customs duty with interest. So this is one amendment. And next one more amendment is that previously it was a monthly statement and now it is a quarterly statement, and that quarterly statement needs to be filed within 10 months from the end of the quarter. And thereafter the next point is with respect to goods sent on job work. So previously 6 months, but now they have changed it to 1 year, let it be capital goods or other goods. Then while computing the depreciation, so we need to take quarters, calendar quarters. So which means first year will be 4 quarters. First 4 quarters is taken as first year, next 4 quarters will be taken as second year, next 4 quarters will be third year, and so on like that it should be taken. So these are the changes that we have. Okay, and next, so there are few queries like yes. Sir, fee for GST 80,000 rupees for every 1 lakh or part thereof, maximum 25k. Calculate on which component? Only on the tax component. Only on the tax component if the dispute is with respect to tax. So on whichever dispute you are going for appeal, if the dispute is tax, on tax component; if the dispute is penalty, on the penalty component; if the dispute is refund, on the refund component; if the dispute is ITC, on the ITC component. Okay, and next, suppose if the dispute is on penalty, then on the penalty component. And next, in refund of GST deduction of 86A, related items, deduction of 86A. So there is no 86A deduction and all in GST. I don't know what you are referring to. And that actually as per Income Tax Act, right, for notification 8 2018, yes, WDV as per Income Tax Act, and percentage calculation only on tax, interest or penalty not considered. Yes, percentage is on the tax. Once we paid for first appeal, then don't we need to pay again for second appeal? No, we have to pay even for the second appeal also. In refund of GST need there is no deduction under 86A. You are referring to what? I really don't know. So next so the next area, sir, section 129 pre-deposit is 25% of penalty, does not include tax. Yes, of course, because 129 penalty order only will be passed. So that's why in case of pre-deposit on penalty order only you will go. 129 is only penalty order. In 129 there is no tax. 129 there is only penalty. On that penalty only we can go for appeal. Okay. Next, number 13, penal charges and liquidated damages. Penal charges and liquidated damages, keep this in mind. So please concentrate whenever there is a liquidated damages. So first we need to check, is it compensatory in nature or penalizing in nature? How do you know that it is compensatory in nature? When you read the question, they will tell there is a breach of contract and the contract cannot be performed. When the contract cannot be performed, so at that time some amount is paid. There is no possibility of performance. At that time some amount is paid, then it will be coming under compensatory in nature. When it is compensatory in nature, it is not treated as consideration, it will not be taxable. Suppose if it is not for the purpose of, there is a possibility of performance, but the said amount is collected in order to discourage that person from doing such act in future. So then, for example, check dishonor charges or traffic fines, etc. So in that case, so what will happen is that this is levied to discourage the person from doing such act in future. So it will be again coming under, so not treated as consideration and not taxable. In other cases, that is balancing figure. First you need to check, is it compensatory in nature or is it penalizing in nature? If it is compensatory or penalizing in nature, don't treat it as consideration, it will not be taxable. If it is balancing figure, means there is a possibility of performance, for that the money is collected, then it will be treated as consideration, but the taxability depends upon principal supply. If the principal supply for which this is being collected, for example, ticket cancellation charges is not compensatory in nature or penalizing in nature. So if it is a AC ticket, a train AC ticket is taxable, so ticket cancellation charge is also taxable. If it is a sleeper class ticket, it is exempted, so the sleeper class ticket cancellation charges is also exempted. That point you need to keep in mind. Okay. Next, so we would have already paid 10% of disputed during the first appeal itself. Now if the dispute amount is the same in second appeal, again we need to pay, yaar. Trust me, again we need to pay. Already we have paid in the first appeal also. Again in the second appeal, whatever is the disputed tax, on that we need to pay. First appeal what you paid is only to commissioner appeal. Second appeal what you are paying is to GST. Again we need to pay, 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 again we need to pay. So 100 times also I will tell, again we need to pay. Okay, so trust me, that is the correct answer. Then next we have number 14, that is RCM time of supply, including self invoice. So I have given this in the Telegram group. I shared this with you, you can just check that. So this image I have shared with you all. So say this, what is that you need to remember here is that GST implications in case of supply under RCM. The first aspect that you need to check is that if the supplier is registered, then who will be giving invoice to whom? Supplier only will give invoice to the recipient. What is the time limit within which supplier will give invoice to recipient? Regular time limit under section 31. If it is supply goods, so supply of goods, supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery, so that will be taken. And suppose if it is services, So banking or other services within 45 days from the date of banking or insurance service 45 days from the date of completion, other cases 30 days. So that is a regular time limit for issuance of invoice by supplier. In case even if it is RCM, when supplier is issuing invoice, you need to follow regular time limit. What if the supplier is unregistered and the recipient is registered and the supplier is covered under RCM? Then the self invoice will be given by recipient to supplier under Rule 47A. What is the time limit? Within 30 days from the date of receipt of goods or services. That is the time limit. So this is the invoice time limit. And next one, what is the time of supply in case of services? So we have 2 points. If the invoice is given by supplier, we need to take the date on which payment is made to supplier or 61st day from the date of invoice given by supplier, whichever is earlier. Suppose if the invoice is not given by supplier, then what we need to do? So we need to take, so date on which payment is made to supplier, instead of taking 61st day from the date of invoice, we need to take date of invoice given by recipient to supplier. Date on which invoice is given by recipient to supplier, not due date. Date on which self invoice is given by recipient to supplier, whichever is earlier will be taken as a time of supply in case of services. But for goods we have a different point. For goods always it will be 3 dates, that is date of receipt of goods, that is in case of goods covered under RCM, date on which goods are received by the recipient, date on which payment is made to supplier, or 31st day from the date of invoice given by supplier. What if supplier not given invoice? Then in that case we have one proviso which says that date of entry in the books of recipient will be taken as the time of supply. And when the ITC can be availed, suppose if invoice is given by supplier, then invoice already issued by the supplier, so whichever month the recipient makes payment of GST under RCM, that month itself they can avail the ITC. So this month we are paying GST under RCM, this month itself we can avail ITC. Whereas suppose if the invoice is given by recipient to supplier, if the invoice is given by recipient to supplier, you check for whenever the invoice is given, whichever month the invoice is given. For example, this month we received the services, but the invoice is given next month, means next month only ITC can be availed. So invoice also, payment also. So whichever month the recipient is giving invoice, self invoice to the supplier, and whichever month the tax is paid, that particular month only, both invoice also should be given and tax also should have been paid. So that date will be taken as the relevant for the time limit. Okay, so therefore you need to check for the question. In the question they will give RCM and self invoice. So whenever self invoice is there, whichever month they have given self invoice, you check that month only they can avail ITC. For example, January month they have received the services or received the goods, for which self invoice is given in February month, means so January month GST cannot be, ITC cannot be taken. Okay, they can pay GST under RCM. So consider for RCM liability, but for ITC it depends upon the date on which self invoice is given. Okay, that you keep in mind. This is in case of RCM. Next 14th point is that, next 15, valuation in case of online money gaming and casinos. So this may also be checked. Okay, Rule 31B and Rule 31C. So this is also possible because now that there is no online gaming, everything is banned. So this is the last attempt for which they might be testing. So for that reason, so Rule 31B, online money gaming. Yes. So you can see what is the valuation to be taken in case of online money gaming. Value of supply in case of online money gaming and casinos, Rule 31B, what should be taken? The value will be amount payable for the online money gaming, whatever is the amount deposited. For casinos also, whatever money that is paid for the purpose of purchase of chips, tokens, etc., that should be taken. Here amount deposited, here amount paid for purchase of chips, tokens. Suppose if there is any amount withdrawn out of the deposit amount, there is no reduction, and thereafter any winnings also, if you are using it, no need to pay GST again. But if the winnings is withdrawn and again deposited, then GST will be payable on that. Okay, these are the key points that you need to remember. Next 16, co-insurance and reinsurance commission. So in case of co-insurance and reinsurance commission, so first co-insurance is what? There is a lead insurer. That lead insurer is collecting the premium. If he pay GST on the gross premium, whatever premium he shares with the co-insurer is not covered under supply. What if the lead insurer is not paying GST on the gross amount? Whatever premium he received, he is not paying, but he paid GST only on the premium retained by him. Then in that case, the co-insurers, lead insurer paying GST on the amount retained by him, then the co-insurer receiving the premium will be chargeable to GST. Okay, that is not excluded from supply. That is related to co-insurance. Reinsurance commission. There is a reinsurance commission which is retained by the insurer. Now the reinsurer, for example, reinsurance commission 1 lakh and reinsurance premium is 20 lakhs. The reinsurer received only 19 lakhs. If the reinsurer pay GST on 20 lakhs, if the reinsurer pay GST on 20 lakhs, then 1 lakh retained by insurer as commission is not a supply. If the reinsurer pay GST on 19 lakhs of premium, then in that case, a 1 lakh retained by insurer as commission will be chargeable to GST. That is this point. Okay. Next one. So 17. E-commerce liability, ECO liability under section 9.5. ECO liability under section 9.5. Payment only through cash ledger. Keep that in mind. Payment only through electronic cash ledger. That is, there are 4 services which are notified, 9 subsection for, that is HATE, housekeeping services if the supplier is unregistered, accommodation services if the supplier is unregistered, transportation of passengers through any motor vehicle other than omnibus by a company, and if the supplier is registered and unregistered, then restaurant service other than restaurant in specified premises, that is a hotel having a value more than value per day, that is per day tariff more than 7,500 rupees other than that restaurants. So if the supplier is registered and unregistered, these are the 4 services which are notified under 9.5. And 9.5 liability always we need to pay through cash ledger, means e-commerce operator should pay that through cash ledger only. They cannot use credit ledger balance for payment of this. Plus they can take ITC. See, ITC they can take, there is no issue. They can avail ITC, but that ITC they cannot use it for payment of GST under 9.5. But they will have some other liability. What is that some other liability? In case of other transactions, they need to pay GST on commission, plus they need to pay GST on delivery charges, listing fees, etc. And on that they can definitely pay using credit ledger as well as cash ledger. But 9.5 liability they have to pay always using the cash ledger. Next, 18. So 74A. So GST paid under 74A. GST paid under section 74A. Whether ITC is available to recipient? Yes, ITC is available to recipient. This is also one crucial point. ITC is available to recipient. Previously, we had a blocked credit. What is that? So whatever GST that is paid under 73, 74 like that, 74, ITC not available to recipient like that, one point is there. Now that 74 is not there, 74A, and I have not added 74A, which means what is the effect? So I am your supplier, I am paying GST under 74A, but of course conditions are satisfied. So provided conditions are satisfied, provided conditions are satisfied. What does that mean? That is, I reported in GSTR1, it reflected in GSTR2B, all the conditions are satisfied, but I have paid GST under 74A. And in that case, can you avail the ITC? Yes, ITC is available to the recipient. This is one important adjustment. Then number 20, renting of commercial property. Renting of commercial property. So in case of renting of commercial property, what is the condition? So renting of commercial property, we need to check for exemption. What is the exemption? So the exemption is only one point we have exemption, that is continuous stay. Continuous stay greater than 90 days, minimum 90 days, greater than or equals to 90 days, and value less than or equals to 20,000 per month per person, per month per person. So this will be exemption. And what about the RCM? What are the conditions for RCM? Conditions, if you see, supplier is unregistered. Supplier is unregistered. What if supplier is registered? No doubt it is FCM. Supplier is unregistered. Next, recipient is registered. Supplier is unregistered. Recipient is registered, but not opting for composition scheme. But not opting for composition scheme. but not opting for composition scheme. This is one new point. What if supplier is unregistered, recipient is registered, but the recipient is under composition scheme? Then also it is FCM and supplier only will pay. As supplier is unregistered, no GST. Okay, that is how you need to write. See, first supplier is unregistered, yeah, recipient is registered, RCM. But if the recipient is registered but opting for composition scheme, means no RCM. Wherever there is no RCM, it will be FCM. If it is FCM, supplier should pay. But what if supplier is unregistered? No need to pay GST in that case. Okay, so that is the point. Next, seized vehicle, goods confiscated. What is the time limit for appeal? So seized goods, in case of seizure you cannot go for appeal. Dear, tomorrow is the exam. Please don't ask me all these type of questions and all and create a fear in me, because first of all, in case of seizure order, there is no appeal possible. In case of seizure order, maybe you are testing me or what, I seriously don't know. You cannot go for appeal. There are some non-appealable orders. In that seizure order is a non-appealable order. You cannot go for appeal against it. And order for payment of tax dues in installments, for that also appeal is not possible. And order for transfer of proceeding from one officer to another officer, appeal is not possible. And with respect to prosecution order, that is imprisonment order, appeal is not possible. So in this case of seizure, appeal is not at all possible. Then next, 21. Rule 42 and Rule 43 implications, already I told you. Rule 42 and 43 implications, already I told you while discussing the 14 marks question. So that part. Next, 22, sponsorship services. Sponsorship services. In case of sponsorship services, what should be taken? So sponsorship services, very simple. So first, supplier should be body corporate. Okay, so sponsorship services, what is the exemption that we have? Only one exemption for sponsorship services, that is sponsorship money collected by recognized sports body. Recognized sports body is exempted. Sponsorship money collected by recognized sports body is exempted. And RCM, when RCM will be applicable? What are the conditions for RCM? Condition number 1, supplier other than body corporate. Supplier is other than body corporate. What if supplier is body corporate? Definitely it will be FCM. And recipient is body corporate or firm. What if recipient is not body corporate or firm? Then FCM only. So first, supplier body corporate, always FCM. If supplier is other than body corporate, then check recipient. If recipient is body corporate or firm, RCM. If recipient is also other than body corporate or firm, then it will be FCM only. Supplier only will pay GST with respect to this. Then next, 23, sale of inputs. Sale of inputs imported under advance authorization. Imported under advance authorization. Is it possible or not possible? Not possible. Keep that in mind. Not possible. Because whenever we are importing some inputs under advance authorization, it is subject to actual user condition. So what is that actual user condition? Only the person who is importing it should use it. So can that inputs be sold to any other person? No, it is not possible, because such import is under actual user condition. So again, this is one area might be tested, because not tested in past exams so far. So then 24A, ex-bond bill of entry. Ex-bond bill of entry filed. Ex-bond bill of entry filed. Goods not cleared from warehouse. Goods not cleared from warehouse. What are the implications? So ex-bond bill of entry already filed. So don't apply Kesoram Rayan case. Don't apply that Kesoram Rayan case and bring in the deemed removal. Ex-bond bill of entry already filed. When ex-bond bill of entry is filed, goods are not cleared from warehouse. Now in this case, point number 1. So don't apply Kesoram Rayan case. Kesoram Rayan case, that you don't have to apply. And here in this case, if there is any increase in duty, should we pay that increased duty? No. If duty increased, duty increased at the time of actual removal, duty increased at the time of actual removal, okay. No need to pay excess duty, no need to pay differential duty, no need to pay differential duty. So this point also can be tested. This is Biaco-Lari case, that's why we cannot, okay, no need to pay differential duty with respect to this. Then next one, 25, re-importation of goods, what are the conditions, etc. and all you should be knowing. And UEN for e-way bill, UEN for e-way bill. So now there is a requirement of unique enrollment number for e-way bill, that is unregistered person also can generate e-way bill, but they need to get a unique enrollment number. So total 4 people can obtain unique enrollment number, should obtain unique enrollment number. Number 1, a person who is making supplier of goods through e-commerce operator, supply of goods through e-commerce operator, unique e-way bill, unique enrollment number is required. Supplier of goods through e-commerce operator, unregistered supplier of goods through e-commerce operator, then unregistered transporter, and unregistered warehouse keeper, and finally an unregistered person who wanted to generate e-way bill. These 4 people are required to get unique enrollment number. Number 1, unregistered supplier of goods who is making supply through e-commerce operator, unregistered transporter, unregistered warehouse keeper, unregistered person who want to generate e-way bill. Okay, then sir, MCQ 6 case 1 RTP September 25 is a question on appeal for confiscated goods and truck. Please check. On confiscation you asked about seizure. On seizure it is not possible. On confiscation we can go for appeal. Same time limit. What is the time limit for appeal against the confiscation order? That is, if it is a registered person going for appeal, 3 months plus 1 month condonation of delay, that is there. On confiscation order appeal is possible, not on seizure order. On confiscation order appeal is definitely possible, okay. And the regular time limit is applicable. What is the regular time limit? 3 months plus 1 month condonation of delay. If department is going for appeal, 6 months plus 1 month condonation of delay, okay. Then next, 26. So export upon payment of duty, export upon payment of duty, export upon payment of duty. Which duty? Customs duty. Refund under both the options not possible. Refund under both the options, refund under both the options not possible, okay. This is the latest amendment. So whenever you are exporting goods upon payment of duty, refund under both the options not possible. Previously at least option 1 was possible, but now refund under both the options, that is pay IGST and get refund, or don't pay IGST and get refund. Then what is the way out? Pay IGST, that's it. Pay IGST, pay IGST and treat it as regular tax liability. Treat it as regular tax liability. Regular tax liability. See, refund is not possible does not mean you don't have to pay IGST. You have to pay IGST, treat as a regular tax liability. Then next one, 27. That is FEMA and RBI time limits. What is that FEMA and RBI time limits? So we have in case of export of goods, in case of export of goods, if the proceeds are not realized within the time limit under FEMA, okay, proceeds not realized within time limit under FEMA, within time limit under FEMA, what will happen? What is the time limit under FEMA? 9 months from the date of export, 9 months from the date of export. So proceeds not realized within the time limit under FEMA. So then in that case, so we need to pay the refund back, okay. So refund recovered along with interest, refund payable along with interest, within 30 days, from expiry of FEMA time limit. from expiry of FEMA time limit, and again there is a RBI time limit. Within that RBI time limit 6 months. So within that RBI time limit, if the proceeds are realized, then whatever money that we have paid back, we will be able to get it as refund. If realized within time limit under RBI, within time limit under RBI, then refund paid can be claimed back, okay. So that is with respect to this, but this is applicable only for export of goods, not for export of services, because export of services you can claim refund only on realization of proceeds, okay. Then 28, this is in case of vouchers. So vouchers point will definitely be tested, okay. So vouchers point, keep that in mind. What are the points you need to remember for vouchers? Vouchers are neither goods nor services, okay. So vouchers may be of two types. So recognized by RBI. If it is recognized by RBI, treated as money, and it is neither goods nor services, so therefore it is not a supply, okay. That is what you need to keep in mind. What if it is? What are the vouchers recognized by RBI? Prepaid instruments, prepaid vouchers, we pay money and get the voucher. Then not recognized by RBI. If the vouchers are not recognized by RBI, then what is the treatment of these vouchers not recognized by RBI? Treated as actionable claims, If it is treated as actionable claims, and then also it is not a supply, So on vouchers, sale of vouchers, there is no GST, but on the agency commission, okay, sale of vouchers on principal to principal basis. So I am selling the vouchers on principal to principal basis, no GST liability. What if I am selling on agency basis? I get the agency commission, on that agency commission and other charges, GST will be payable. What is the implication of identifiable voucher, non-identifiable voucher? See, this voucher, sale of voucher is not a supply, but if I supply the goods or services against these vouchers, that supply of goods or service against a voucher is supply, because this voucher will be treated as consideration. If it is identifiable voucher, at the time of issuance of voucher itself we need to pay GST. If it is non-identifiable voucher, whenever the voucher is redeemed against supply of goods or service, at that time only we need to pay GST on supply of goods or service against this voucher. See, sale of voucher, supply of is not a supply, but the voucher will be treated as a consideration against supply of goods or services. So the time of supply point needs to be tested, okay. Next, sir, I have wrongly mentioned it as rule 86A, it is rule 89.4A, 89.4B. This 89.4A, 4B is omitted from refund, and therefore we don't have to do any deduction with respect to this. So normally we need to compute net ITC into zero rated turnover divided by adjusted total turnover, and in that net ITC, whatever ITC already claimed as refund under 89.4A, 4B, now we need to not reduce. You take only net ITC, that is ITC on inward supplies of inputs and input services during the tax period, that only will be taken, and capital goods should not be taken. Zero rated turnover, adjusted total turnover also, you would have to take turnover under 89.4A, 4B, okay. That is the point. Next, 29, that is suo moto registration. Suo moto registration. What is the suo moto registration? That is, whenever a person is liable to get registered but not got registered, so officer will generate a TRN. Officer generates temporary reference number. When officer generates temporary reference number, within 90 days, they need to make application. For registration. Keep that in mind, okay. They need to make application for registration. Generally the time limit for making application for registration, you will remember 30 days na, but in this case it will be 90 days. And the last part is 30th point, related to assessable value in case of ex factory price. Assessable value in case of ex factory price. So what should be taken in case of ex factory price? Say this, that is, whenever the question has ex factory price, then you need to apply this. Okay, so first you need to check ex factory price is given in the question. Customs valuation when ex factory price is given. First you need to check whether freight from exporting country to India is available or not available. Freight from exporting country to India is not available. When it is not available, we will take 20% of FOB, correct? When it is not available. So when we take 20% of FOB, what is the process to be followed? You take, while computing 20% of FOB, first the freight from the factory gate of the exporter to the port or airport plus loading charges in the port or airport is part and parcel of FOB. So you need to take freight at the 20% of revised FOB. While counting FOB, freight from factory gate of the exporter to the load airport or port plus loading charges is part of FOB. On the 20% we need to take minus already something is considered, that is freight from factory gate to the load airport or port and loading charges already taken, that we need to reduce. First you need to add that and compute FOB. On that you need to take 20%. From the 20% you need to reduce which is already considered in FOB, minus freight from factory to load airport or port and loading charges in the load airport or port, we need to reduce. This is how you need to calculate the freight. Okay, suppose if it is freight is available, but if it is air freight, if it is freight ascertainable but it is air freight, then also we take 20%. What we need to do? First actuals. While taking actuals, you need to take from the factory gate, freight from factory gate of the exporter to load airport or port plus load charges plus air freight from exporting country to India, everything should be taken in actuals, from factory to importer's airport, or 20% of FOB. So 20% of revised FOB you need to take. While computing revised FOB, we need to take even the freight from factory gate to the load airport or port and loading charges, so revised FOB, and whichever is lower, from that whatever is already taken in FOB, what are the things which are taken in FOB? Freight from factory gate to the load airport or port and loading charges, we need to reduce. That's how we need to calculate. So these are the two important adjustments you keep in mind. If it is other freight, just take the actuals, don't follow, but this you need to apply only when the ex factory price is given in the question. Okay, next, so comparison should be actual versus 20% of FOB only in case of air freight, not in case of normal freight. In case of normal freight, that is in case of freight ascertainable only, we need to take this. If the freight is not ascertainable, always we need to take 20% of FOB. Okay, then sir, if we paid IGST on export which is dutiable under customs, is this turnover considered for rule 86B? No. Zero rated supplies, it is a zero rated, you may not be able to get the refund. You may not be able to get the refund. In this case, you may not be able to get the refund, but still it will be treated as zero rated supply. Export upon payment of duty is still zero rated. So zero rated will never be considered for rule 86B. Okay. Then with respect to calculation of adjusted turnover for inverted tax structure, whether zero rated supplies adjusted as calculated for without payment of IGST need to be calculated or include zero rated supply on actual basis. So we need to, first of all, in numerator we need to take inverted turnover. In denominator we take adjusted total turnover. There everything we will take, all zero rated supplies, non zero rated supplies, everything we will take. Okay, that is with respect to this. So these are the 30 areas which are crucial and critical areas which can be tested in exam. Okay, so this 30 areas you need to revise it once again. I just given the revision, don't worry about it, you just quickly go through it. I will share this PDF also with you in the Telegram group, and these are the areas, crucial areas which can be tested in tomorrow's exam. All the very best for your exam, and whatever doubts you have, you please put it in the Telegram group, because in Telegram lot of doubts they are asking and I have been continuously replying. So whatever doubts you have, you please post it. I will clarify all those queries, and you definitely gear up for tomorrow's exam. Be cool, handle the question paper with chillness, don't get irritated, frustrated, don't have pressure, etc. and all. Definitely you will be able to clear in flying colors. Okay, and I told you what are all the areas you need to focus upon, focus on those areas, okay. And now that I am just completing it, so completing this session, you need to, what you need to do is that solve as many questions as you can, and if these areas you have not covered, cover these areas, and even case scenario MCQs also you check, okay. All the very best, do well, thank you.